Hello, I'm Jim Demo with Clark County Close-Up. Thank you both for meeting with us.
Thanks for having us.
Sure, Peter, let's start with you. Can you please give us a brief overview of how property taxes are calculated?
Well, to give a brief overview, we have what's called a budget-based tax system. And so what that means is each year taxing districts provide us with a budget, a total budget they want us to collect. And what we do is we go out and assess property, and we come up with the assessed values, we add them all together, and we come up with a total assessed value. We take that budget, divide it by the total assessed value, come up with a tax rate, and then we take that tax rate and apply it back to the individual assessed homes to determine what portion of the big pie that was sent to us by the taxing district each individual homeowner is going to pay.
Okay, and so just so people understand, the tax bill comes from Clark County, but you're actually collecting for a number of jurisdictions, taxing districts, as you mentioned. What are some examples of these taxing districts?
So the taxing districts in Clark County include state schools, cities, library, ports, school districts, fire districts, and the county as well, and some other smaller districts.
Okay, so a wide variety of districts, even though it's coming from Clark County. So, the Washington legislature recently passed a bill to address school funding. Can you provide us a brief overview?
Sure. One of the things to realize to begin with is that the way that they decided to fund the schools, it was a big change. And what they did is they instituted a rate. Earlier I talked about taxing districts sending us a budget. In that scenario, the rate's always been variable. But in the new tax bill, they actually assigned a rate of $2.70, which will then have a ratio applied to it. And so what happens is that in this first year in 2018, last year we collected $1.98 per thousand. In 2018, the rate's actually going to be $2.89 per thousand. And the increases in the rate, but also we've had increases in assessed value at that point. And so there's a significant increase to taxpayers just from that rate increase, plus the increase in assessed values. Also in 2018, the school districts are able to collect their entire maintenance and operation levy that have been passed by voters at the rate. So in 2018, we have the new state schools plus the maintenance and operations levy rate. That's in 2018. In 2019, we have the same thing as we have the new state school rate 2, but in 2019, the maintenance and operations levy becomes what's called an enrichment levy, and currently, under the current law, it's going to be levy limited to $1.50 per thousand in 2019.
Okay, and we're going to show an example in just a minute about this. And this bill took effect at the end of last year?
Yeah, the bill took effect in there. So the first time that this is going into effect is the 2018 taxes.
Okay. So you were talking about the moving from the budget-based to a rate-based. So does this mean there'll be greater fluctuation in levy rates, or is it?
Yeah, what it means is when we move to a rate base, say before with a budget-based system, when assessed values would go up, the tax rate would come down to compensate for the fact that assessed values were going up. Or, the assessed values were going up, the rate would go down. Mm-hmm. In this scenario, and under Washington state law, we're required to assess at 100% of market value. And so what that means is going forward, as assessed values increase, which they will because the market has been increasing, that the amount of the increase in those assessed values will be the increase in the Washington state school taxes. So if someone gets a 10% increase in their assessed value from 19 to 20 or 18 to 19, they're going to be seeing that increase of 10% in the Washington state school taxes also, because it's at a rate and it's not variable. It's a fixed rate, not a variable rate.
Okay. So there's been a 1% cap on levy increases. Does this it sounds like this is above the 1%. Does this fall under the 1%?
Yeah, the 1% does not apply to this. The state legislature, when they did it, they say they set it at a rate. Before, the budgets can only grow at 1% per year. But under this, when the assessed values increase, if it increases 10%, the state can bring in 10% more. There's not the 1% limit applied to this particular tax rate.
But still, the other jurisdictions like the county and city would still be under the old system?
Correct.
Okay.
Yeah, in fact, in this one, it's for 4 years, we're just bringing in the rate, and then I think it's the 21 tax year, then the 1% limit kicks back in. So it's just for a period of 4 years where it's rate-based, and then after that, they're going back to the 1% limit. So it's for just a short period of time.
Short period of time. Okay. How does this rate affect senior citizens and the disabled already qualified for tax exemptions?
Sure. So those folks that are already approved for senior and disabled exemptions are exempt from this new state school levy. So they would actually expect to see either the same state school taxes as they get today or possibly less if that first part of the state school levy drops.
Okay. And you mentioned that the state levy so for existing maintenance and operations levies for local districts, those will remain unchanged for this year, but then will be capped at 150
in 2019.
in 2019.
Yes.
Okay, so now this is where we get to this scenario. So we have a chart here we're going to be showing. Can you kind of talk us through, because this is showing 2017, 2018, 2019, to kind of give us an example of what it will look like?
Absolutely. So if we look at a little bit in the past, 2017, if you have a home with approximately a $272,500 assessed value, with a state school levy rate of $1.98 per $1,000, and a school levy or a school M&O rate of $2.80, the state school taxes would have been $540. The local M&O levy dollars would have been $763 for a total of $1,303 of tax for a combined state school and M&O levy. Moving forward in 2018 with this state change, if you had increases into our market, which we have all experienced, our assessed values are going up, so we would estimate a $300,000 value on an assessed value for a home. The impact for the new state school levy rate of $2.89 per $1,000, plus the existing M&O, again, the voter-approved levy rate of $2.64 for a local taxing district, actually brings us up to a total of $867 of state school taxes, $792 of existing M&O approved levy dollars, for a total of $1,659. That's an increase of $356.
So quite a jump this coming year. Okay.
A very dramatic jump,
Yes.
Definitely. So assuming we continue to have growth in our market and our assessed values, in 2019 we might expect to see that same home have an assessed value of almost $335,000. That state school levy rate does not change. That M&O, that maintenance and operation levy for the school, actually becomes an enrichment levy, is capped at the $1.50, so that reduces that amount. So the state taxes would go up to $968 over the prior year. The school levy, the new enrichment levy, would actually reduce down to $502. So the total impact of that tax burden would be $1,470. So it's about a $189 drop from the prior year.
So it kind of goes up next year and then it'll go down.
We're definitely going to see a peak and then a smaller valley afterwards, and then kind of a normal growth from that period forward.
And Jim, I just want to point out that those dollars that we utilized in there for the home values, those came from RMLS, and what we did is we used the median sales price of homes in Clark County at the different time periods. So we're actually utilizing rates that are coming from the market of homes that are being sold in Clark County. We want to make sure that when we're doing this, that we were using a source that's recognized for people in terms of what homes are selling for in Clark County.
Okay, and that example is, again, just an example, because
Correct.
Each school district will have different rates. So what happens if I live in a district with a high rate? For example, Camas School District. could I see even more savings in 2019? Because it would be from whatever the existing M&O rate would go be capped then at 150.
Well, those school districts that have the highest M&R rates probably going to see the highest increases in 2018. We'll see the greatest increase or decreases, I should say, in 2019, because say the delta between say a 360 to 150 is definitely different than a 264 to a $150. So those that school districts like the Battleground School District that have higher M&R rates, they'll see greater tax decreases in 2019.
And do you anticipate, are there any districts where they could actually see an increase in 2019?
Well, all of our school districts in Clark County are currently collecting above the $1.50 rate, and so I don't see any of them having higher because they're all going to be levy limited at the $1.50 per thousand due to the current law.
And the existing maintenance and operational levies are different than school bonds. So school bonds used for building schools.
Correct.
So does this impact at all if you have school bonds currently in your district?
Right. No, this change doesn't impact the bonds. Those bonds are voter-approved expenditures that we incur debt on behalf of those taxpayers to build our schools, those facilities, to improve schools and facilities, and those are not affected by the state levy change.
Okay. So people are probably going to want to know, well, how's this going to impact me? Where can they check?
Well, there's a couple things. The first thing they can do is they can always go to our website in the assessor's office. The other thing is we've been working very closely with the ESD and the school districts, and so we have developed a landing page with the ESD 112. People can go to their website to check it out. It'll have information on the state schools, and then from there they can jump to their individual school districts, where the school districts will be providing the information and what's happening in each of their individual districts.
Okay, so we're going to show these on screen. So the assessor's office phone number 397-2391, website clark.wa.gov/assessor, and then you mentioned the ESD page. Again, we'll show it on screen, esd112.org/school tax. And so that's where they can find out specifically about where their districts are.
Correct.
Okay, well, thank you both for meeting with us. I'm sure it's been quite a change for you to keep up with all this.
Definitely.
Yeah, it definitely has, and we are expecting a lot of calls when tax bills go out. Tax bills will be going out about the middle of February, and so we are expecting a lot of calls from that.
Thank you.
Thank you.
Thank you.